You're seeing them all good. You want a new one? You want a pouch? Let me give you a purple one. Purple one? You don't want it? Want it?
Hello, hello, hello. Anybody home?
Good day.
Hi, good afternoon.
Good day, good
Afternoon.
afternoon.
How is everybody today?
Awesome.
Wow, man, that's what I'm talking about. Because I wish I had an awesome week, but it was not awesome. It was crazy and wild. Anybody else had a crazy, wild week? No, I'm the only one.
No, I have it all the time.
All the time. Okay, I feel so much better. Kelly, thank you for saying that. Let me just, first of all, give my apologies to everyone in my class. I know I promised you your grades. Everybody must have been looking. Some must have been saying some bad words and wondering what happened. So my apologies, nothing happened. I still have a couple I'm not finished with. I had to put everything down and deal with some other matters. Kind of got in the way and demanded I do it. So if all goes well, what I promised last week, you'll get this weekend, one way by hook or by crook. So just hang in there and be a little patient. You'll have your grades very soon. Okay. Anybody had any governance issues last week that you want to raise? No? Did anything happen in your environment that made you think about corporate governance? Man, how did you guys get to have this kind of work life where everything is hunky dory, no this and that? Hmm.
Nothing bad that happened, but it's the end of the fiscal.
Oh, that thing.
Uh-huh. And we had auditors come in and like it's good to put two and two together basically. So
Yeah, actually, Gia, that is a governance issue because the auditors are now going to be looking at the same things we're talking about and 10,000 things more. Okay, trust me, we're talking now about financial literacy and governance, and a big part of the problem in the governance world is the preparation and production of financial statements, trying to make sure that transactions are properly accounted for, that the financial records are correct, that people are not found to be trying to cook the books or otherwise defraud the company. So that audit is coming in. That is a corporate governance event every single time because what they come up with at the end of the day is a very important feature for everybody from the shareholders of the company all the way down to the employees within the firm. Because depending on the results of those audits, strange or wonderful things can happen, or both. Okay, so yeah. How has it been going? Have they been bugging you a lot?
for us in the branch, no, they just came in and did their accounts basically. That's in the branch.
Okay, so these are external auditors or internal auditors?
External.
Oh yeah, those guys. Okay, either way, whether they're external or internal, they're all part of the governance process, what we call the financial side of things. And so, if you have not been a part of an audit before, God forbid, that should be strange. But whenever, if ever, you'll discover that a whole lot of the things that you're now becoming aware of will make a little bit more sense, perhaps, um, going forward. Okay, so good luck with that. Gia, I certainly don't envy you. I don't want to see any auditors, that's for sure. Nobody wants to see them. All right, Kendra,
Yes, sir.
how are you today?
I am wonderful.
Great, great. No governance issues.
No, sir.
Okay, lucky you. You get to sleep peacefully this weekend and go to work on Monday without stress.
Yes, sir.
Okay, good for you. Okay, let's see who's next on my. Alson,
Howdy.
There you are, Alton. How are you doing?
Like the old people in the island say, poker, poker.
Yes, I get that completely. All right, well, welcome aboard. Poker Poker or not, you're here. And that's the great thing. Jeffries.
Hi, good day.
Hi, Jeffries. How are you doing?
I'm okay.
That's good. Have you put down the big stick yet?
The big stick.
That's just an old expression. When somebody promises you something and they don't come up with it, you pick up a big stick and say, ow.
Yes, sir.
Okay, wonderful. For those of you who are wondering, that's a private joke between Jeffries and the lecturer. She knows what I mean by the big stick. Okay, Shatoya.
Morning.
Shatoya.
Morning, I'm here.
Morning. Any governance issues?
No, I was on vacation for 2 weeks, so
Oh, no wonder. You are having fun.
I wouldn't say fun. I was doing this case study.
Oh, that slowed things down.
Yeah.
That's good. Did it make you a little bit miserable?
Yeah, and no. But I have a question.
Good. First of all, I was hoping it made you miserable a little bit. And secondly, I'm happy you have a question.
Yeah, for number 4, the question is briefly discuss the issues surrounding transparency.
Right.
So I read that paragraph on transparency, but I saw no issues.
You didn't see any issues?
No.
What the hell? I am so happy you raised that, Shatoya. See, let me tell you something. Communication is really very interesting. Okay, hold that thought, Shatoya. Anybody
Mhm.
else in the class read that paragraph on transparency and didn't see anything? Let's help a sister out. Did anybody read it and see anything? Because she's like, man, I read that. I don't see any transparency issues. Hmm. Shatoya looks like the only one who read that paragraph so far.
It can be.
Can't be.
No,
Can't
there
be.
are issues in there.
Alexandria. Yeah,
There's
and
issues in there. I didn't finish it actually, but there's issues in there.
now
Yeah, I
Shatoya.
agree with Alex. There are issues.
Yeah, there are.
Under
So-
the paragraph where says transparency, but I really read this over and over and I really don't saw, I didn't see no issues.
Think about it from the high level perspective. They sold shares to make sure that there are more persons, that there's more accountability across the board. Before it was just owned by the majority of the family. That's a transparency issue. Those
Yeah,
are transparency issues.
yeah. The thing is,
Oh,
transparency.
okay.
So you're looking at it as this is a transparency issue. You have to look at what did they change in the organization, and that's where the transparency comes in. So you have to look at,
Absolutely.
okay, what was before, and then what did they change, and then you'll see the transparency.
Okay, thank you.
Yeah, there you go. So it's a good thing you raised that, Shatoya. Suppose you just kept that a big old secret to yourself, and then you said, "Man, the hell with it. I'm not even doing 4."
Well, that's the one I didn't answer.
Now, with a little help, you can go and say, "Okay, doggone it. Let me see what they were doing before and what they did to change it."
So
and how those
basically,
changes-"
Latoya, compare paragraph 1 to paragraph 4.
How about that?
Okay.
All right. And if
Okay.
you do that carefully, you should see some transparency, some changes from the old to the new that allowed people and whoever was interested to look in and see that, hey, things have opened up in this company and are being done differently and better.
Okay.
All right. Good stuff. Doggone it. Good thing you asked that question. Yes.
Yes.
Way to go. In other words, don't keep things stuck. If you don't like it, too bad. Ask it anyway. Okay. Thank you very much, Alexandria. Annalisa.
Hello.
Hi, Annalisa. Any governance issues?
Well, like Shatoya, I was on vacation this week.
What the hell?
Yeah.
Okay, so you are getting a tan as well.
No, I was working on my case study as well.
Oh, did you have any stress with the case study?
Well, we had a little bit of stress. Toy and I hashed it out for most of it, but that was the one question we both came up with.
Excellent. All right, so now you guys know how to attack that question.
Yes.
Okay, good stuff, good stuff. Lucia,
Hi.
hi, Lucia. Any governance issues?
No, sir.
Okay, no stress. That's good. Even if there are, you're certainly saying, well, I don't see any. Because even if you don't see it, remember governance is a little tricky. Even though you don't see it, it's going on somewhere around you, just not always that visible depending on where you are. By the way, which week are we in today? Anybody knows?
Is it 8?
Is it 8? Anyone?
Or
8,
7, 8? No, no, this is week
7
7.
last.
This is 7.
I
Yeah,
no, I
week
think
7.
Mm,
Yes.
What week are we in?
Which
7.
week are we in? 7.
7.
Remember, after today, how many weeks do we have left?
3.
Including your final exam week. So yes,
Yes.
we are in week 7 today. So for those of you whose register is a little skewed, go ahead and update so you don't get stuck. All right. Renee.
Hi,
Renee?
good day.
Hi,
Yes, I'm
Renee.
here.
Any governance issues, Renee?
Um, we always have governance issues, but this week we had an issue where decisions are being made around where management is choosing what should be resoluted, what should go before the board, and what shouldn't. You know,
Yeah.
it's
Yeah, it's that old gray area.
Yes. And certainly every little decision maybe doesn't have to go before the board, but bigger ones really ought to. And we've had an area where certain things just were not done, and we're
Indeed.
cleaning up now. We're
Yeah.
in cleanup mode at
Yeah,
any
clean up,
rate.
clean up mode, which is another governance issue. Trying to make sure that you clean up all the things you need to clean up and nothing doesn't get stuck.
Yes.
Absolutely. Uh, good luck with that. I'm glad it's you and not me. Those kinds of things. I spend my whole life cleaning up stuff, so I know what you mean. Only too well. All right, excellent, excellent. Speaking about cleanup, I got a call from a colleague not too long ago saying that they got a letter from BEC saying that they're writing in connection with their temporary electricity supply. And he called me because he's an old colleague from back in the day. So I got a call from an email from BEC concerning temporary electricity supply that they need me to come in and either increase the time or shut it down for the permanent service. So I'm like, okay, what's the problem with that? He said, well, the problem with that, Sam, is that my house was built 15 years ago, and then my permanent electricity supply has been in right after the temporary supply was finished, after construction. So I'm saying that to say this. How is it that BPL is just coming back on the 15-year-old temporary connection, not knowing that the temporary connection was shut down 15 years ago and the permanent supply was installed? How did that happen? That's what we call cleaning up stuff. Something happened, now they're cleaning up stuff. But it's amazing to think that something like that, and there were quite a number of persons. He was not the only one. I understand there are quite a number of people whose accounts require cleaning up in that regard. Fascinating. Okay. So These governance issues, I tell you, it has all kinds of faces and all kinds of complexions. Don't presume it's just money laundering or fraud. Okay? Far from it. It's about backlogs and cleaning up and what should go to the board, what shouldn't, and why are people keeping certain things from the board and so on. And what do you do if they are keeping important things from the board? Do you blow the whistle? Do you report it? Who do you report it to? Okay. So welcome to the world of governance. It never really ends. Okay, Janisha.
Good afternoon.
Hi, Janisha.
Hello.
Any governance issues this week?
I suppose we have, I work in a fairly small branch, and two of my colleagues on management level are being transferred to other branches. On the corporate level, the intention is to leverage the strengths across the bank network, the strengths of the stronger managers. So we're saying farewell to two colleagues on management level to welcome some others who weren't doing so well in the larger branches. So I know that's a people risk issue that trickled down to us.
That is a people risk issue for sure. What is fascinating is that you are now able to recognize it as such. And
Yes.
certainly that is something that will require, no doubt, quite a number of things to quote unquote mitigate and get settled in before that storm is over. So yeah, good luck with that. I'm glad it's you. And not me. Those kinds of things, as simple as they may seem on the surface, could and are always challenging in one form or another. Good stuff. All right, so buckle down. It's going to be interesting, as I'm sure you know.
Yes.
Okay, Tricida.
Hello,
All right,
I'm
Tricida.
here. How are you?
Okay, there you are. Yeah. Any governance issues this week?
No, personally, I didn't have to deal with any this week.
So you had what we call a quiet week.
More or less, yes. I had a good week.
Yes. Enjoy it because
For a change.
yeah, for a change, a much needed, good, quiet, bloody week. Point well taken.
Yeah.
All
Before
right.
the storm. You know,
Yeah.
this crazy season, what they call audit season.
Yeah.
So about to start before the storm. So I'm taking a nice breather.
Good. But make sure you enjoy every moment because you know when that storm begins, that's a whole different ball game. All
Tell me
right.
about
Thank
it.
you very much. Gia.
Okay.
Here.
Okay, Gia is here. She already mentions something. Alexandra. Alexandria. Alexandria has gone off for green tea. Okay. Deandra. I think she's still on the road. Okay. Last but not least, Benitra. Okay, Benitra's not with us today. Benitra?
Deandra's here.
Ah, Deandra's here. Okay, fantastic. Perfect. Benitra is not here. All right, so let's get back into the accounting finance discussion. Hopefully by the time we're done today, I'll leave you with a few more important nuggets that you may or may not be aware of. The whole idea is any language in accounting and finance and otherwise that you pick up along the way can only be helpful. Um, I was looking at some notes I'd made for your final class week after next concerning certain types of um, financial information that we should know as individuals and companies, like savings and investments and debt, how to manage them, certain securities that are out there for investment purposes, etc., how they work and where they work. So if I decide to include some of that stuff, I will be sending that to you guys this weekend, so you can.
Mr. Wilkinson?
Hi.
Hi, I wasn't here for last week's class. Did you send out the results from the midterm exam?
Doggone it! Who said that?
No, I'm asking.
Oh no, not you. When I came on, I had a big fat egg on the top of my head and a huge apology to everybody. And my excuse was that I had a whole bunch of things that came up that I had to deal with. So I had to put down all of my grading and exciting stuff that I was doing, deal with those matters. So now I'm back to what I believe is normalcy. And so what I promised you last weekend, I will make through this weekend by hook or by crook. Okay, so hang in there, and thank you so much for your patience.
I have a suggestion.
A suggestion,
Yes.
okay?
For the final exam, when you write the questions, you could put how much points each one is worth, please, because in writing the midterm, you really
I
couldn't
agree.
decipher how much to write or not to write, because it wasn't really clear as to if you wanted like a paragraph or anything like that. So it was kind of hard to kind of sift through exactly what you wanted from what you didn't want, because there was no points allocated to each question.
My, like they do in the UK, points allocated. That probably explains why some people wrote me an entire, I don't know, epistle for an answer that just needed one or two sentences. Maybe that's part of the reason. Okay, I'll consider doing that.
Yeah, and then like you had a question where it was yes or no. So we wasn't sure if you just say yes or no and give a response,
Oh,
that
no, in a case like that, if I say yes or no, that you just say yes or no. If I want you to respond, I'll ask another question. Okay, so if it's a yes or no, true or false, just respond. You're not required to
Okay.
say anything more than the question itself.
Right. But see, that's where the issue came in, because it was under the short answer section. So it seemed as if we supposed to give an explanation with it. Because like I said, because there was no like points allocated to it, you wasn't sure if it was just you answer it true or false, yes or no, or you actually give an explanation of, like you back up your yes or your no. You see what I'm saying?
I understand. And of course, again, it's something that students are always faced with in examination, whether the points are allocated or not. Because oftentimes in American examinations they don't do it, but in British examinations they do allocate the points, etc. And the problem with it is your students are confronted with how much should I write?
Yeah.
And some people write to the point, and others like just in case more needs to be said, they say more.
Right.
So for one answer, I can be there like a little while trying to decipher, okay, where's the answer I'm looking for in this now? But your point is well taken. Point's well taken.
Okay, thank you.
Absolutely, no problem.
Good afternoon, Mr. Wilkinson. Just let me know I'm present. This is Benitra.
Who said that?
Benitra.
Oh, Benitra. Okay, thank you, Benitra. Let me just fix that X to a present. Benitra is here. Thank you very much. All right, so now we're still in our first set of slides. We're down to the accounting equation. Does everybody have their slides? Notes?
Yes.
Okay, great. So we're down into the discussion about the accounting equation. I think the last time we looked at the accounting cycle, and somebody raised the keen question, does it begin with the transaction or does it begin with the recording? And Anybody remembers what my answer was? Does the cycle begin with the transaction or the recording? Technically, what was my answer? Anybody remember?
The transaction?
Section?
Yeah. The transaction. Does it begin? Sorry, the transaction itself. Where does it really begin?
Identifying the transaction. You begin with identification
Yeah, we did. We
of the
begin with
entries.
identifying. What do we mean by identify? Anybody figure that out? What do we mean by identify? When we say identify, what are we trying to do? It's a very important function, actually. In other words, if something is happening, a transaction is happening, the first thing we have to do is look at that transaction and say, what is really going on? What does this represent? Does it represent a sale of real estate? Does it represent an investment in stocks and bonds in another company? Does this represent the purchase of inventory? Whatever it is, that is where the identification occurs. We try to figure out at that point where the transaction is, what type of transaction is this? That is actually the key to everything else we do, because once we determine the correct transaction, what is this really, then we can go ahead and make an effort to record the transaction. Of course, recording the transaction requires knowledge of the accounting equation, the double entry system of accounting. Did we discuss the double entry system?
Yes, we did briefly.
Yeah, in a nutshell, what is the double entry again?
Every debit has a credit, every credit has a
Yeah.
debit.
Yeah, that's it. So once you figure out what type of transaction you're dealing with, then you can go ahead and record the transaction in the second step of the cycle by recording the relevant debit and credit. Remember, when you record a debit and credit, the amounts have to be the same on both sides of the entry. So if you hear a discussion, or you in an environment, or you somehow get stuck with any activity like this, this kind of knowledge and information really does give an insight into basically how things should function. And if you hear anything to the contrary, then you can say, wait a minute, what do you guys mean you're not doing it that way? According to what I understand, you should be doing it this way. You should be using a double entry to record your transactions. Why are you not doing that? And so even though you're not an accountant, you're a internal auditor, you're a regulator, you're whatever it is, knowledge of these little bits and pieces can really wheel you into the discussion, into the environment, and you can still contribute and raise pertinent questions about what's going on. That's the key. All right. So now the accounting equation, if you ever hear about it in discussion, is a very simple equation in accounting. It is the foundation of the establishment of the company's balance sheet. And so it very simply says that assets must always be equal to liabilities plus shareholders' equity. Now, what is shareholders' equity? Shareholders' equity is really the investment into the company by the owners of the company. Remember, I may have said some time ago that if you are a shareholder in any company, you are part owner of that company. So if you go on Monday and buy 10 shares in J.S. Johnson, which is now a public company, you are now a part shareholder, part owner of that company. So they have to give you all the information on shareholders meetings, problems with directors, dividends that are being paid to shareholders, etc. So because you're now a part owner, you don't have to have 10,000 shares to get the same benefits as the person who has 10,000 shares. If you own a single share, you're still a shareholder. Minority shareholder, of course, because you hold so little shares, but it doesn't change your status as the part owner of that company. So what this equation is actually saying then, if a company has $10,000 in assets, whatever they might be, we'll see them later, soon, and it owes $5,000 to the bank in the form of a note or loan, what do you think, based on this equation, the shareholders' equity should be? The investment by the owners. Anyone? based on this equation?
Can you repeat the question again?
Based on the equation, assets equals liabilities plus shareholders' equity.
5,000.
5,000, yes. How did you arrive at that?
Because the liabilities plus the equity should equal the assets.
Every single time. And if you
Should be a
use,
balanced entry.
it should be a balanced entry each time, okay? Whatever is on the left should be equal to the sum of the right, period. And so even if you only have partial information on what's on the right-hand side of the equation, it should always balance. You simply do the simple arithmetic and you will not be stressed, okay? Period. All right, so don't see it as a big deal. It's a very simple equation. And if you follow the rules of the equation, it's hard to go wrong. Now, let me see where some of you are in terms of the elements of this particular equation. Because in discussing some of the accounting side of things, basic financial information comes out of it. That is always important to know, no matter where you are in the firm, and not only in the firm, but even personally. Some of this stuff can be applied outside of your working life as well. All right. So by definition, then, what are assets? Anyone? By definition, what are assets? I don't mind if you Google it. I really don't mind. In fact, I want you to Google it if you need to.
Pretty much your capital.
Aha. I was hoping somebody would say that because a lot of students say that. When technically, especially for accounting purposes, assets are not capital. But you're getting warm.
It says a
Asset could
useful
be
or valuable
cash.
thing or person.
It's
Useful or valuable thing or person, an item or property owned by a person or company.
there you go. That's the one we want. An item or thing owned by an individual or a company. So whenever you hear the word asset or assets, it represents something that a company or an individual owns. For our purposes, more so a company, but by extension, an individual. The definition is the same. Okay, so that's an important definition to know. So if you own a car and your car is worth, you think, $15,000, then that car is your asset. Owned by you, nobody can take it away unless, of course, you owe the bank some money and you don't pay the bank. Then they have a legal right to take it away. Which brings me to my next part of the equation. What are liabilities?
Liabilities are legal responsibility for something owed.
Yes. Legal responsibility for something owed. So anything that you owe, any bank, any credit union, any individual, any country, anything that you owe is a liability. Another important word to know in finance. Okay, for sure. Not just accounting, just in general finance. These are heavy hitters. Okay, so for example, if you own a car and it's worth $15,000, but you actually owe the bank $10,000 in liabilities, how much of the car do you own? Anyone?
What's the asset value?
The asset value of the car is 15,000, but your liability to the bank for that car loan is 10,000. How much of the car do you really own?
5,000.
5,000.
Yeah, and that's it. Okay, so you don't really have full ownership of the vehicle or the asset until you do what?
Repay the bank.
Pay off
the
debt.
loan.
Absolutely. All right, so keep paying until you're all paid up. Because the moment you miss a payment, dog eat your lunch. They are coming after you. And if they have any trouble, When you go out from work one afternoon, your car will not be there. What do you think will be gone? Anyone? No?
Repossessed.
Yeah, repossessed. All right. So these are very important words in business and finance that you need to know for work and for not work. Okay. And then the third part of the equation, the shareholders' equity side. Anybody look that one up?
Yes, equity, shareholders' equity is the amount that the owners of the company have invested in their business.
Absolutely. Okay. The equity or shareholders' equity is the investment by the owners in the business. For example, if any one of you guys decide to open up a business next month or next year, you will finance that business from two sources. For example, if you want to open up a clothing store, you need to buy clothing, correct? Those clothing will become your inventory that you sell, but since you own them, once you buy them, you own them, they would become your assets. The problem is, where will you get the money from to buy the clothing to get started, or whatever the business is? You only have two sources. One, you can borrow the money and incur a liability. See that word again? All of a sudden, these things are popping up everywhere. These are important things to know, whether you're an accountant or not. Okay, if you anywhere in the firm that you work, these are important things to know. If you work anywhere in finance and securities and whatever area you might work in, these kinds of things are important to know. You don't not have to be an accountant to know the importance of assets and liabilities and equity, for that matter. It's important to the accountant because the accounting equation is a part of the direct accounting work that accountants do. But for other people in the firm, they also have significance, not from an accounting perspective, but definitely from a definitive perspective in terms of what they are and what they represent. Okay? So you either borrow the money or you use your own money that you have saved up in your bank account. Those are the only two typical ways of financing a business. Okay? Now you might say, well, suppose somebody else invest in the company. Well, then it'll be your money plus their money, or zero money from you plus money from them. Now, if they invest the money in the firm, what does that make them?
Liability.
Well, now we're getting warm because sometimes we mix up liabilities with capital. They're not the same. Remember, liabilities are what you owe. Capital is what again? What you invest. Okay? So if somebody other than you invests in your business, how does that change the scenario? Do they become the owner?
Well, it depends on
No.
how they invest. If they invest by shares, then they have part ownership. If they invest by, I guess, bonds, then they would be competitive.
Yes. Well, she kind of extended. Yeah, I got made a little sophisticated. But yes, it depends on the nature of the investment. But typically, and we'll talk about that part of it a little bit later, but typically the initial investment by the owner would be the capital that the owner puts into the company. Okay? If there are many capital investing persons, for a corporation, we call them shareholders equity. If it's a partnership investing money, we call it partnership capital. And if it's an individual investing money, we call it John Doe capital. Okay. So depending on the type of business, whether it's a sole proprietorship, a partnership, or a corporation, we use different words for equity or capital, but the end result is the same: money that is invested by the owner or owners. Okay. So believe it or not, just in discussing the accounting equation, those definition of the elements of the accounting equation, your understanding of them puts you way ahead of a whole lot of people, believe it or not, in terms of their understanding of finance and what goes on in the markets. okay, in the world of finance. All right, because these are common expressions depending on where you are. So they're always good to know. I'm a compliance officer. Do I need to know it? Yes, you do. I'm a data entry person. Do I need to know it? Absolutely, you do. Okay. Maybe not to the extent of those persons who are dealing with the more intense, more sophisticated side of it, but certainly being aware of what they are is absolutely important. Okay. So now that you know the nature of the accounting equation, now that you know in order to execute it that we have to use the double entry system of bookkeeping, we can now get into seeing the relationship between these assets, liabilities, and owner's equity within any typical business. So let's have a look. Let's see what those bookkeepers and accountants and other persons behind the scenes are doing while we're busy selling shares and redeeming stuff and doing our other jobs, internal audits and compliance work, etc. Let's see. And again, why is this part of the financial literacy? Because these are the foundations of finance. Okay? And it's important to at least have a rudimentary knowledge of them, no matter where you are in the firm, so that at least, at minimum, you can identify, discuss, and report to some extent and where appropriate. Okay? So let's look at a couple of basic accounting transactions just to see how those guys think in the back office when we pass in and look in. Uh, let's look at our first transaction. Remember when a transaction occurs, somebody said the correct thing a little while ago, we have to identify what it is first and foremost. So we have identified the first transaction as a what, anyone? What is it? Does anybody see what the first transaction type is? What is it called?
Accounts receivable.
Well, that's the asset. What's the transaction type?
Sells goods on credit.
Yeah, there's a sale of goods on credit. Now, folks, even though we're looking at a little bit of the life of the accounting person, just like with the accounting equation, when we look at the elements of the equation individually, all of a sudden we're dealing with a lot of different business terms that do not even have direct accounting implications yet. They're just business terms that are good and important to know. So in this transaction type then, the sale of goods on credit, now we're learning about a few other financial issues in business. That's good to know, depending on where we work. And depending on where we work, you may not see the connection immediately, but you never know when you have to see the connection. That's the point. Okay? So when we talk about selling goods on credit, what do you think that means? What does that transaction mean? Welcome to the accounting person's world. Let's identify the transaction. What do we think is happening?
Are you sharing your screen, Mr. Wilkinson?
Somebody needs me to share screen?
Where are we reading from? Because I don't see.
Oh,
that.
we are on slide 11, basic accounting transaction.
Oh, okay.
Yeah,
Thank you.
no problem. All right, so what do we mean when we say we sell something on credit? Anybody ever bought anything on credit? No?
Would it be something like
Like the
you
account, what? Sorry.
you purchase something, but you don't pay for it right there and then?
Mm-hmm.
That's absolutely what credit is.
Like,
When you buy something, you get possession of it, but you don't pay for it at the time you take possession of the item. Okay? I'm sure all of us may have gotten that kind of facility at some point in our lives. If you haven't purchased anything on credit yet, hallelujah to you. You don't use a credit card, you don't go to the bank to borrow, you pay for everything cash. And there are some people who still do that for some reason. But that's not the norm. Very often, most of us, if not all of us, find ourselves paying for stuff on credit. So when you buy something on credit, that means the store is selling it on credit. That's the transaction. And what the store is saying to you is, I'm giving you my inventory, my item you're buying, with the promise that you will come back on the agreed upon date to pay me the money.
Mr.
So what is
Wilkinson, so
fine.
companies AID and ASH Pritchard do that.
Do they?
Yes, you have a credit account and you
Yeah.
could get order how much ever they allow you per month, and you have to pay down whenever the time comes.
Indeed. I'm so happy you said that because here's my next question. Do they do it with everybody or just companies?
Yeah, I need to
Um,
because I like AID.
no, when I used to work to AID, so they had it for employees. And then they had it for, I think, bigger companies.
Kind
But
Yeah.
I'm sure
Kind helping
AI
me. I need to know that no more. Thanks.
No. Yeah.
but
They had it for
You're helping
companies
me.
who had bond, eh? The companies used
Yeah.
to use a bond.
Because I need a
Yeah, but
rug out of there right now. I could use that little, I could use that little cell. I could use that little credit account. You know what I mean? But you would
Yeah.
helping me, man. Don't tell me things that can't help me.
Yeah. The problem is
you still have it as
AID, AID and companies like AID recognized a long time ago that it's not a good idea to give credit to just regular customers. That's why when the
yes.
rest of us walk in who are not companies and who are not
Mhm.
employees.
Em-
See,
Yeah.
if they give credit to the employee, they own the employee's salary. If you don't pay, they just take it out of your
Mhm.
pay.
Yes.
Or they arrange to take it out every week before you get it. So there's no risk there. If they
Mhm.
give credit to large companies like Sandpin or XYZ company, they know that the risk they are not being paid is minimum as well. It will not typically be difficult to get paid. The reason why they don't give it to the rest of us lowly souls is that a lot of us are not trustworthy. We will get the item and promise, we swear when we get our ace to draw next week, we'll be in to pay. And then we don't show up. We just go to we go to whims, or we go to another store when something happens so we don't have to pay AID. And they know this, and understandably so. And so, yeah, credit is not given out randomly. Credit has to be done selectively. If you don't understand how to give credit effectively, you'll find yourself out of business. Because remember, every time you get credit, you're not getting any cash. And if people don't pay as promised, dog eat your lunch. And your bills are always going to come on schedule, even though people may not pay on schedule. So we have to be very careful how we advance credit to anyone or any entity for that matter. Okay? So in this case, there's a sale of goods on credit. Clearly, this company, AID or otherwise, they're happy with the customer they're giving credit to. Maybe they've done this business for a long time. They know these people. There's no problem with them. So assuming that that is the case, we sell some goods on credit. What happens on the asset side, anyone? Remember, we're talking about the equation now. What happens on the asset side? It's right there. Don't
becomes
feel
like
afraid to say it.
it becomes like you're saying you don't rightfully own it until you pay it off.
Well,
You mean for the person who got the product?
yeah, for the person who got the product, what asset?
Would we would credit accounts receivable and debit. Okay, guys, you gotta help me with that one. What we debit? We debit an inventory.
Well, it's interesting because remember, if you sell something on credit, normally, if you had sold it for cash, what would you have received?
Yeah.
Cash.
Correct. Did you receive cash in this case?
No.
No. So in accounting, when you do not receive cash because you sold something on credit, instead of debiting cash, we debit
You debit accounts receivable,
yeah, we debit a very special account called
accounts receivable.
which means that every time you sell on credit, your accounts receivable account would increase. Okay? Because we're debiting or increasing that account in the absence of receiving cash. Why do you think we debit an accounts receivable, anyone? Why do you think we call
Because
it?
of revenue recognition?
Well, getting warm, but why would we give it a name like receivable? What does that suggest to you?
That we're
That is
receiving
something
something on a
outstanding
future
and
date.
there's something to
We
be received.
expect to
that
get
hasn't
that
been-
back.
That's right,
Yeah,
yeah.
we expect to get that.
Get
Get
that
back.
back.
Oh,
Yes.
yeah. And
Bring
so,
that bub back in, eh?
yes, so in accounting, we give it a name so nobody forgets. It's a receivable, meaning we expect to get it back, and we expect to get it back when you said you're gonna bring it. So we debit accounts receivable, and on the liabilities and equity side, what increases? They tell us what increases. You know, you guys on the right-hand side of your slide, liabilities with equity.
Your
what
income.
increases?
You increase
Yeah,
your income.
the income or the equity increases. Don't read anything extra. So when you sell on credit, your receivable increases and your income or equity increases. Okay. Some of you who maybe have been familiar would see that as sales increasing. At this point, we're not calling it sales yet. We're saying your income increases. Notice your income increases even though you don't have the money. Do you notice that? Does anybody notice that? So in accounting, even though we don't get the money, we still debit an account called accounts receivable, and we credit an account called sales, which is an income account. That's the fascinating thing about the financial side of accounting. We still account for the sale, even though we haven't gotten the money yet. Fascinating, but that's how it works. Because as far as we're concerned, all customers are supposed to be honest and live up to their commitment to pay. So we expect that whatever receivables we have outstanding, that our customers will come in and pay it as quickly as possible. Okay, so that's one scenario in the accounting and financial world. We have a second transaction type. What is that called?
Sell service.
Services on
Yeah, a sale of services on credit, which is the same asset effect and the same liabilities and equity effect. The only difference that has changed in this transaction, can anybody see it? Pick it out? Everything is the same except what? Very sneaky. Everything is the same as the first one except what?
You're selling a service instead of a good.
Thank you very much. We're selling a service instead of a good. Okay, folks? Welcome to the language of business and finance. It has all kinds of faces and languages, its own jargon, its own dictionary. Okay, finance and accounting. So don't worry about it. You pick up on these little bits and pieces as you go. That's the whole idea. Okay? And then finally, the last transaction type, what is that?
sell stock.
The sale of stock. Now, does anybody know what stock is?
Yes.
Ah, interesting. Yes, but not in this case. How about that? Sometimes, depending on which country you're in, we refer to shares as stock and stock as shares. Or we
You mean
simply say share
cows and
stock.
stuff?
Sorry?
You mean cows and stuff?
Say it one more time.
You mean cows and stuff like that?
Oh, that's interesting. Uh,
Not quite, so I say
not
whatever.
quite that kind of stock either, which is why this word called stock could be confusing. Because there are so many other definitions of stock.
It
Shares
could be
of stock,
considered for inventory too, eh?
absolutely. And that's the one we're interested in. Okay, inventory. Now, the Americans call it inventory. The Brits tend to call inventory stock. Okay, just for your information. So now it begs the question, another finance question. What is inventory? Anyone? Ever heard? What is inventory?
Wouldn't it be the goods that a company has for sale? The
Absolutely.
products, and the products the company is selling makes up the inventory?
Yes, it does. All the goods and products that the company has purchased for resale is referred to as inventory. Are inventory assets?
Yes.
Yes,
Yes, they are. Why? Simple answer. Why? Don't complicate it.
they carry value.
But that's not the reason why. Only primarily.
It's
What do you
something
think
that's
primary
owned
reason? Sorry?
because it's owned.
Because the company owns them. Absolutely. Okay. Don't forget, liabilities carry value too. The dollar amount that you owe. Okay. The key for inventory is that they are owned by the company. They are assets. Okay, for sure. Notice what increases in this example.
Cash and equity. Cash and equity.
Cash and equity. Now, the fact that cash increases tells us that this is not what type of sale.
One on credit.
Yeah,
It's not accounts
on
receivable.
credit. Absolutely. All right. So now, yeah, notice as we roll through it, it gets easier and easier to put things in perspective. It gets easier and easier to analyze and identify transactions. And that's the whole purpose of this stuff, to be introduced to it. If you're not an accountant, you don't need to know all the details. You're in some other area of your work, but these things come up. You sit on a board in some capacity, they come up, you now know what they are. You sit in a committee meeting somewhere, you now know what they are. You pass in the accounting department and somebody says something that pricks your interest, they think you don't know, now you know. And so you can either correct it or report it. Say, I heard somebody say that they're planning to carry away some inventory. And now that you know what inventory is, say, wait a minute, they getting ready to teach stuff. See my point? And all of a sudden, you have a responsibility because of that newfound information to report this new thing or not, which is another governance issue. Based on good governance, what should you do? Report or not?
Yes, report.
Yeah, sorry. Good governance requires that you report. You know that. If you hide it or ignore it, no matter what your reason is, I'm not saying it's not a good one, whatever that is, but typically under good governance, you should report. And of course, the more familiar you are with stuff, the more effective you can be at understanding what's going on in your space, and then when necessary to report. Hopefully you don't have too many reports. So you now know what double entry bookkeeping is and the accounting equation. And so we don't lose any more sleep when we hear the term double entry bookkeeping. I believe you'll see it again very soon. It's that important. Okay? For every debit, there must be a corresponding credit. All right. So now it gets interesting. First of all, there are some rules of bookkeeping and accounting that is important if financial records are going to be correct. Remember, I told you a great deal of corporate problems come through financial records, financial reporting, incorrect reporting. Some of those incorrect reporting are just plain old employee errors. And then some of those incorrect reportings are just plain old employees deliberately cooking the books and making transactions that never occurred. Okay? That's why we have our auditors come in to find out who's trying to do that, if anybody at all. Okay. So, can somebody read those two little paragraphs on double entry bookkeeping, beginning a debit? Anyone? A debit is?
A debit is an accounting entry that either increases an asset or expense account or decreases a liability or equity account. It is positioned to the left in an accounting entry. A credit is an accounting entry that either increases a liability or equity account or decreases an asset or expense account.
Now, folks, let me just say this. Whether you work in a bank or an accounting department or whatever the case might be, these rules of double entry bookkeeping never change. They apply always. I don't care what anybody tells you, what they suggest to you, what they show it to you in Google. It doesn't matter. These are the rules of double entry bookkeeping. Please, even if you don't have the time to learn them post-examination, it's nice to be aware of them. Okay? So in essence, this expression debit essentially increases an asset. So if you have cash of $50 and you get another $300, then you should debit cash because that will increase the account from $350 to $350. So a debit increases an asset. A debit increases an expense. So if your BEC bill last month was 300 and this month it's 600, that expense would be debited once again to the electricity expense account. And so your balance in the expense account would go from $300 to $900. Okay, that's how it works. And the more familiar you are with the rules, the easier it is to understand it and to put it in perspective, or even to identify when something is done incorrectly. Okay? So if an asset increases, if a debit increases an asset and an expense, then it will do the exact opposite to a liability and equity account. It will decrease them. It's as simple as that. Those are the rules. Okay? Try not to bend them, and certainly try not to break them. And once you become familiar with these rules, everything fundamentally in the process becomes completely easier to deal with.
Mr. Wilkinson,
Yes.
so how come in the banks we say debit the account? And when we say debit the account, we mean withdrawal.
As opposed to increase.
Yes.
Because
Yeah.
there's
Credit
something
would be an increase.
confused right now.
It always, trust me, from COB time, it was confusing because it was the opposite. So
Yeah.
when we debit in a bank, we mean withdraw funds. When we say credit, we mean deposit funds.
Correct. Now, here's why. Today, you will be in the dark no more. I'm surprised the world took so long to tell you.
No, I know because I did accounting and COB, but it's still confusing because I joined the bank first. So it's a hard,
I know what you
it's
mean.
hard to crack.
Okay, so here's what I want you to do. Can you read the second paragraph and then I'll answer your question?
A credit is an account, that one?
Yeah,
A credit is an account entry that either increases a liability or equity account or decreases an asset or expense account.
another rule. So we have the rule of debits and we have the rule of credits. Don't add or take away anything from any of those. Those are the rules, okay? Now, the reason why you have the confusion in the bank is this. When a
The
customer,
liability.
yeah, when a customer opens up a bank account with you, that money that they open the account with and deposit is not the bank's money. Okay? It is not the bank's money. And if the customer comes in on any day and say, I want all of my money, the bank is obligated under law to give it. So what does that mean? That means that every bank account that is opened at your bank is a liability for the bank.
Oh,
That's why. And according to our rules, what do debits do to liabilities?
Increase in
According to our rules, what do debits do to liabilities?
Decrease them.
decrease them.
Decrease them. That's why when a customer comes to take money off, you debit the account because a debit decreases a liability.
Oh, okay.
How about that?
Thank you.
Absolutely.
Clear, it's clear.
Absolutely. And that's the only reason why we have that situation. Unfortunately, all too often, when persons go to work in the bank, they cannot find anybody who wants to address it for some reason. Even if you raise it, people say, just debit, just credit that. And when they make a deposit, just credit it, and that's it. Everybody walks off. No, no explanation. Okay, but that's the reason. Okay? That's why when we look at buying financial statements, we see them often referred to as deposit liabilities. In case you pick it up again, because all the deposits that are held by a bank are liabilities. The bank owe them all to the people who open those bank accounts, which means that if all the customers remove all their money, what happens to the bank?
It could go out
Anyone?
of,
What happens?
the bank can go out of business.
More than likely will, unless they find their own what? Capital to keep it going. All right. And even then, you still need customers' deposits, not only to do business, but also to loan money. Because remember, when the bank lends money, they don't lend their own money from their own bank cash account. Did you know that? Did
Oh,
you know
yes,
that?
they lend out my money.
Yes, they lend out the depositors' money, not their own money.
But
Isn't that
hey, that's not
interesting?
fair. They charging 15, 17% interest rate, but only giving me 0.5 on my deposit.
Doggone it. There's a regulator in the room.
You was get deposit interest?
Who?
Well, they're non-existent now.
Oh,
Yeah,
because I
Because
got
depending-
they're
depending-
non-existent
And I
now.
got
'Cause the bank
16 cents
the
the
bank
other
ain't
day.
giving
Stop
you
that.
none.
I got 16 cents the other day. Don't do it. 16 cents, man.
How much was your investment? How much did you deposit in the bank to get that 16 cents?
Let's not talk about that.
More importantly, how long your deposit has to stay there to get that 15 cents? Because I never see it.
Oh yeah, you it's on your ending balance, not your beginning balance. So as you withdraw money from your account,
Yes.
your final balance is that's what they're gonna give you
Yeah.
the interest on.
Yes.
I
This
don't
is
see
a-
that. I see the monthly fees coming out. And
This
there's
is an
3
interesting
monthly fees
female
that has come out. I don't
conversation.
see that.
Yes. All of a sudden, it is pricking people's interest by all means, as it
But
should.
guess what? They can take their interest up front on that loan though. They can make sure they
Always.
get their interest first.
Now, here's the problem, since we're talking about financial governance, because that's what all of this is about. Here's the problem with that. Okay? Many banks are paying less than 1% on savings accounts, and in some cases, even CDs, fixed deposits. Maximum maybe 2%. That's heaven on earth.
Who have their TV on?
Somebody's CV is on? Okay, great. So now watch this. They're paying from almost 0% to 2% in some rare cases, but their loans are anywhere from 7 to 15% in interest, depending on the type of loan. So when we think about that, the other financial term that comes to mind, or should, is something called spread. Can somebody look up the word spread? And I don't mean bad spread either.
Mr. Wilkinson, just a short story before they say what spread means.
Play.
I had when I was getting my mortgage, I don't know if I said this in here before, was trying to charge me 15% for a small loan
15%.
when I could go to work and get a 5% interest rate on a small loan.
Right. Well, here's the problem with that. There are two problems with that. Well, maybe one and a half. Problem number one, 15% is the going consumer rate, unfortunately. And since nobody is griping about it, it maintains its position. And so most of the financial institutions are charging around that rate for consumer loans. The other part of the equation again, and now that we know a little bit about equations, the other part of the equation, the equal sign, is that 5% loan that you can get at work. The problem is, because somebody might then say, well, why don't you just go to work and get it? Well, because when we go to get a loan, it's not always just a function of the rate of interest. The rate of interest is a quantitative consideration. They are not all quantitative considerations. Some considerations are what those of us who are a little more learned would be called qualitative considerations. And so the question might be, and what the hell is that? Well, a qualitative consideration might be, even though you can get it for 5%, some employees don't want the employers to know that, first of all, they are getting a loan to begin with. And
I got it.
secondly,
I don't.
yeah, they don't want to disclose why they need the loan to any bloody employer.
It wasn't that big of a deal. I got it.
Well, not in your case.
Yeah.
There are other employees who can get a better rate, but they won't go because of the nature and purpose of their loan request. And some of them don't want the employer to know certain kinds of loans that they're trying to get. For example, if they want to borrow $10,000 to go to Waikiki or the south of France, and then shift over to Italy for a day or two, they may not, even though they can get it 5% of the employer, they may not want the employer to know that they're planning such a lavish vacation. This then, of course, the word starts getting around, since confidentiality is not all it's cut out to be, which is another governance problem. That Cecile is getting that expensive vacation. Who the hell does she think? And then all kind of weird stuff happens. And next year you don't get a salary increase because they say you don't need it, or whatever nonsense people do. I'm just pulling out an extreme situation. Hopefully that doesn't exist anywhere.
Especially if you're trying to use your sick days for part of your vacation.
Yeah, worse.
Yes.
Don't go there. That's even more trouble. Okay, so all I'm saying is, hopefully it doesn't go to that extreme. But the point is, the reasons that we do or don't do are not always because we can save money. Okay, the quantitative side is the qualitative side, some other issues involved. Okay, so that's a good point. Happy you raised a very important point to consider. All right, so what is a spread, anyone? Did you find it? Spread, not bedspread. Not a ranch either.
The electronic, the difference between what you pay for a loan and the difference between what you earn on that loan is the spread.
Finance 101, let's get rolling. Okay, the difference between what you pay for a loan, that's the perfect example I was looking for, explanation. And the difference between what you earn. Now, governance, literacy, finance students, what does that really mean? Take a shot at it. What are they trying to say? The difference between what you pay and what you earn. Very important concept for everybody in this room. The spread. That's sick. All right. So let's say you have $10,000 in the bank and they're paying you.
So something like net worth?
Say it again.
Something like your net worth?
It is net something, not quite worth, but there's some netting that goes on. And here's how it nets.
Revenue?
There's some netting revenue involved, but here's how it works. So yeah, you guys are warm. But here's how all of that netting works in finance. The bank pays you 2% on your CD or your savings, but you have to pay 15% in interest, right? Correct?
Correct.
Yes.
Okay. So the bank gets 15%, but they only pay you 2. What is the difference between 15 and 2?
13.
13.
So now the bank gets a 13% return. Does everybody understand what that means?
Yeah, they need to increase
It's
my,
a
my
racket.
interest.
It's a racket,
It's a
Mr.
racket, that's what it
Wilkinson.
It is mind boggling. Okay? When you look at the spread between what you get paid or earn on your cash and what you have to pay to borrow money. Okay? That's why they are rolling over in dough. Sorry, that's another name for money.
Mr. Wilkinson, that's
All
on
right.
a secured loan.
What about it?
No, I'm saying that's frightening on a secured loan. There's a difference if it's an unsecured loan.
Well,
Then,
either way, it's still criminal.
of course, I'm not disputing that. That's never in question.
Yeah.
You know,
Whether it's secure
banks
or
are the
not.
biggest crooks out there, if you ask me. But anyway,
Yeah. If it's an unsecured loan, then there's a greater risk that the bank won't be repaid, and we could try and justify the 13% spread. But as opposed to a secured loan, you would think that if somebody has $10,000 in cash and they want to borrow against it, that they will get a lower rate to borrow. You would think that that should be the case, and that should be the case because the bank will be holding your cash, and so there's no risk of exposure. However, that is not always the case. They still hold your cash, still make it 15, and still only pay you 2.
That's only if you go to bank. That's no criminal if you go to Bank of the Bahamas.
It's only criminal if you go to BOB?
Yes, it's not criminal if you go to BAB.
How come?
That's a,
You catch me on that one.
they're the only one who's lending unsecured loan.
That no true. Commonwealth Bank famous for it.
Yeah,
I meant to go say Scotiabank ain't famous for that.
Scotiabank was not famous for that.
Commonwealth Bank is famous for giving you whatever you want.
Most of the time, and taking whatever they want if you don't pay.
Yeah.
Yeah, you could. Yeah,
I was one of those persons. I was happy when we got divorced.
Yes.
They're like the husband you don't want, but you can't get rid of.
Hey, what can I say? I couldn't put it together myself. That's an interesting.
I mean, I have another loan with them, but it's small. It's way smaller, and I could actually pay that off myself, but I
Indeed.
choose not to. So I made sure I'm not in a position where I
You're in
only
charge of-
borrow what I know I could pay back if
Yes.
something was to happen in cash.
Yeah, Commonwealth, I wouldn't tell you that they are not compromising at all, but they are not friendly when you have problems to pay back. Okay?
No, and I understand First Caribbean is like that too with businesses and mortgages.
Yes.
They are very
Stringent.
aggressive when it
Yes.
comes to getting funds. Apparently during the pandemic, they actually made a profit.
Yes. They're not like Royal. Royal has that thing, but Royal tends to be a little more lenient.
Now, hold on now. Hold on.
No, that's not true.
Would you say with Royal?
They tend to be a little lenient if you keep talking to them, plead and cry and stuff. Royal might be a bit more lenient, give you a few more breaks.
That's a compliment.
It is a compliment. That's what I'm trying to tell you. It's not all bad.
I
Okay?
get.
I'm not saying you can get away with murder, but if you stay in touch, make your case, prove that you have a problem and so on, they are a little more lenient in my
Yeah.
experience than a Commonwealth Bank or First Caribbean. By all means. So yeah,
Yes,
it's
yeah.
all relative to the institution and to your circumstances. So for example, Commonwealth Bank had the reputation in the old days, and probably still to some extent, like being in the Hotel California. Okay, you can get in very easily, but you can't ever leave because somehow you get stuck. And if you don't pay dog eat your lunch, they run you to hell and back and that kind of stuff. Repossess your furniture, your children, your dog, and the cat. And if you have any fleas in the back of the yard, they'll take them too, so to speak.
Yeah, I don't like Commonwealth Bank for that.
So yeah, they tend to be very stringent on the other side of the fence, but they'll give you
A
loans.
small story. I had an issue with Commonwealth Bank by their system. I had to report them. I said regulated and I reported them. They were anytime,
Regulator report
any,
them.
of course I reported them.
Yeah, they suck at
Anytime
it
a
already.
payment, I was paying them. They was
Yes,
taking out my loan money. But
yes,
anytime any funds came to my account, they also took that and put it to my loan.
and they
And
know
it
that is
took
out of
me,
order.
it took me, I called him and I asked him, I said, well, this is what y'all doing. Oh, that's just how our system set up. I said, well, y'all need to correct your system.
That's
Oh,
right.
it ain't that easy. I said, well, no, y'all need to correct your system. Oh, it ain't that easy, Miss Feast. I said, okay, no problem.
So
I
they're double
wrote,
charging you then.
they was triple
No,
charging me. It
they
didn't matter what it was. If you send me $50, I would never see the $50.
I had the same issue too, but it was with RBC.
Yeah, so what I did was I wrote right upstairs
Yep,
because I in the building
yep.
and I pleaded my case and they had to call me and they had to correct it. And the girl was like, well, why you report us? I say, miss,
Are
I
you
went to
serious?
Central Bank. What you mean, why I report you?
Seriously. Now, Alexandra, let me ask you a question. Did they bloody know you worked at the central bank?
Yes, because they have
Really now?
to see that I worked at Central Bank to give me the loan.
Then the devil with it. That's typically them. I'm so happy you did that, and more people need to do it. They've been getting away with
Report
murder
them.
over
And let me
decades.
tell you why it's important to report them. Because when they go on-site examinations, they bring these things up and the bank have to correct it.
Absolutely,
So if y'all don't report the banks, we would never know.
absolutely. So you
But I
guys,
reported them. The girl's like, I had to write a whole report. I say, miss, but that's your job. I tell y'all need to stop taking my money. They took the bank for my long service for 20 years for serving in Central Bank. They
yeah,
gave me like a little over $800.
yes.
Commonwealth Bank took 6 of that. Why? I don't know.
There's no reason. That's just the
And
way
my
they
loan
do it.
and my loan ain't even $200.
I see
No,
you need that now.
okay? No, what they do is they do this stuff because most Bahamians do not pick up on it.
Charlize watch my account like a hawk.
On the average Bahamian does not watch their account. And if you're not watching your account, you will not know.
Because she
Always
was like,
done.
oh, she was like, well, every time that happened, all you have to do is call us and we reverse the payment.
Hell
I said,
no,
I don't need to call y'all to reverse that because y'all shouldn't be taking it off to begin
at
with.
all.
But you already called them, right?
No, this was when we was in the process of when I was, because I didn't pick it up initially. Obviously, it was going on for like a year, but I didn't
There you
pick it up
go.
until like later down. I was like, how come I ain't seeing this money? And it
Right.
just wasn't registering to me
That's
until
right.
the bank gave me my in-service award because I had that money for something. So
Of
when I
course.
saw that the X amount of dollars was missing from my account, I called them. It's like, oh, we could just reverse it for you. I say, so what happens if someone send me money? Oh, well, you could just have to call us every time and we could reverse the pay. I say,
Imagine
miss,
that.
what if I in a dire situation every time it's and that was the day when I cussed.
Good.
And I did say all the heavy words to her. I say, miss,
Good.
you ain't mother effing telling me. If I in a sticky situation, I'm his mother
Tell
effing
you.
pick up the phone.
That's
I
right.
call y'all to tell y'all reverse a payment y'all ain't supposed to take. I said,
Imagine
bitch,
that.
you ain't serious.
Seriously.
I said, bitch, you ain't serious with
That's
me
what I'm
today.
talking about. That's what I call correcting a bloody governance problem. Okay? Welcome to the real flicking world of governance. That's how you correct things. Okay? You don't correct things by not checking. You don't correct things by being ignorant. You don't correct things by seeing it and pretending you don't see it. That's how you correct it. You
Speak
attack
their
it.
language. You speak their
Yeah,
language.
whatever. You attack it until it's fixed. That's it.
Like we said in the police force, I'll speak a language that you like, that you
Yes.
can understand.
Absolutely.
Yes.
Okay. Let me tell
And she
you.
was like, no, you could just call us. Because she
No,
said, you don't
no,
have to
no,
get
no,
upset.
no.
I say, miss, you running my pressure higher today, not today. Today ain't the day I need my pressure.
No.
Put my
They
money
know that is a no-no. That is not proper banking practice. They know that. They're just trying to see what they can get away with. And for
Yeah,
those
and the thing
poor
about it
people who
is,
don't know,
they take this money off after I already give them my loan.
of course, they know
So they
that.
already take off my loan money and then they doubling up on the payments.
That's right. And if you don't pick it up, dog eat your lunch.
That's
And
the
trying to
easy
get
way
it.
of stealing.
Of
Yes.
course.
So
That's another way.
now what they have to do is, because before with Commonwealth Bank, they like how once you work the financial institution, they give you your net salary. So if you have a loan with your financial institution, you ain't gonna ever see it because you're not coming out. So that's what Commonwealth Bank used to do. I never used to see it. I just used to see what was minus it. And I also used to say, this just looked like too much money coming out. So now what they have to do is they deposit all of my money and then I see where they take it out. That has to be reflected on my online banking where they take out whatever money from my loan. They can't take out more than that because then it's going to be a problem. So I see what is there and then they take it out. Before I never used to know how much they take out, but now no, y'all deposit all my money and then y'all take out your loan.
And that's the beauty of online banking. Because now some of the control has come back to the customer. You don't have to go into the branch. You don't have to call, wait for somebody to answer the phone. You can go online each month to make sure that the charges and loan payments and other credits and debits that you're supposed to have for that month actually happen. And if you don't see them, then you can pull a bloody Alexandra. Go in
I
and
was
play
mad.
crazy.
I was mad that day. I was mad.
It is maddening.
So you use of course Commonwealth Bank now can't pay only paying with 1 cent on the dividend now.
That ain't don't have nothing to do with Alexandria.
Well, Commonwealth Bank paying 1 cent on the dividend.
And I have nothing to do with it.
No, that doesn't mean they're not making money. They're just keeping more for them and keeping the rest away
For
from
the
you.
shareholders.
Yeah.
The dividend payments depends on if you are voting or non-voting customer. If you're a non-voting customer, they give you whatever. I mean a non-voting shareholder.
Now remember, we already said in the earlier part of this class, treating shareholders the same is critical. That's good governance. If you have one policy for majority shareholders and another policy for minority shareholders, or you have money and you're just not paying it out because you don't feel like it to the shareholders, these things are not acceptable. That's poor governance.
And of course, stop them from double dipping, man.
Okay, no,
That ain't not, like I said, I am a customer just like anybody else. When you have a problem, you pick up the phone, you call DFIU, Domestic Financial Institutions Unit, and you let them know what your problem is, and they have the right to investigate and resolve it for you. That don't fall under Alexandria portfolio. Alexandria deals with the private investment banks and them other set. I don't do domestic, I do international.
So, Alexandria, for those persons who are not keen enough to write that down, what's that name again? Domestic Financial
Institutions Unit.
At the central bank.
Yes, DFIU.
Okay, folks.
I see you're moving.
For those of
we
you
move.
Who you know what to do.
Yeah.
You have somewhere where you can report them and have an investigation done separately by the regulator. So those banks who you paid off your loan and they still say you owe, report them. For those banks who are trying to pull off that nonsense that they did to Alexandria, report them. For those banks who have CDs for you and they can't prove that the CD was properly liquidated and the funds went to your account, report them.
Where you moved to?
Sorry?
I was asking where they moved to.
We moved to Financial Center, 3rd floor.
Yes.
Okay, all right.
Okay. So there you have it. All of a sudden, it turns into an information session, but a very important information session for those of us who are in financial services or not. We all are impacted by these financial situations and decisions that are going on in our environment. That's the key. Okay, it's not all about debits and credit, albeit it's important. It's about all the things that swirl around them. Okay? No doubt about it. All right. Thank you so much, Alexandria. That I hope that was a huge insight for some persons who may not have even been aware of these kinds of things. Okay, that's one of the
And
great.
just as a little insight,
Yes,
I letting y'all know now, just coming from me,
yes.
we get the most complaints for y'all financial services people. I name it from top to bottom. Commonwealth Bank, we get the most complaints. Then we get, no, sorry, I lied. Royal Bank,
Royal.
Commonwealth Bank, First Caribbean, and then the other rest. But in that order, we get a lot of customer complaints from Royal Bank the most, Commonwealth Bank, and First Caribbean.
It's expected for Royal Bank when you move your service down in the Caribbean, you know.
Well, that's another.
To
Hold
cut price, to cut costs, you know.
I said, yeah, but then your bread and butter affecting customers. So you need to tell the bank that they need to do better with their customer service.
I see. Well, I see. In some cases, I see some cases they brought back the service, but you know.
So I'm not saying that the bank is a bad bank. I'm saying in terms of customer complaints that come to Central Bank, Royal Bank has the highest amount of customer complaints.
But I'm saying it's because of it's due to Royal Bank trying to be smart and move their thinking like, hey, we can cut costs. We don't have to pay this high fee to the Bahamian staff, and we can get those low-paying staff down in the Caribbean to do the same work at less price. But at the end of the day, they were getting robbed highly by those Caribbean staff.
Well, yeah, that's a whole other governance matter. Not to mention that I'm sure we have enough Bahamians who will work for minimum wage if they only have to answer the phone politely, right? Correct?
No, but no,
Yes,
I think the problem is, we as Bahamian, we allow people to take us for take us for a little, you know.
Well, remember now, there's only one entity that can make that happen or not happen. And those are the persons that we vote in to represent us. Unless the government, unless the government sits in with the heads of these institutions and say, look, we understand you're trying to cut costs, but for the last 100 years, you've made gazillions of dollars from this Bahamian economy. We can't tell you or make you, but we are asking you to leave these jobs here. Bahamians are quite capable of answering the phone.
I agree with what everyone's saying, but it isn't the Bahamas, we were, like I was saying earlier, we report to Trinidad. So if Canada comes in and tells Trinidad to cut costs, because our dollars are almost on par as the US, we make more. My salary could pay 4 Trinidadians.
Yeah,
so
I know.
Trinidad is gonna say, let's cut costs by.
But guess what, Alexandria?
This Jeffrey.
For the phone service, they will not be paying your salary. Phone service requires minimum pay.
You think so?
Yes.
Okay, let me clarify some things. This Jeffries, by the way. In our advice,
Go ahead.
In our advice center, they also have to, so their role is the same as a teller on the lineup. They have to make loan referrals as well. So you can't pay someone, what it is, $250 now, and say, here, scavenge for loan referrals and credit card referrals. That's not fair. And they ain't even seeing the clients, like how a teller inside the branch would see a client.
That's my
Sorry,
point.
I don't understand that.
That's my point.
Explain that a little bit more for me, please.
That's my point.
I
So the
understand, and it's
advice,
still madness.
So what you're saying is they like if I'm an existing customer already, those
mhm,
persons would call me and be like, "Hey, I see you have good credit. What now? Would you like an additional
It
credit
doesn't
card
require any skill whatsoever.
or loan?" That's what you mean?
not o- they don't be the advice center. They just be in the branch. But if you call the advice center and we going through and they going through your account, etc.
Mhm.
I don't work in advice center, I'm just saying.
Thank
And
God.
they see no, and they see where you're an opportunity, they have to take that and go to a loan officer. And they have to bridge the gap, even though they don't see you, anything like that. So as a teller on the lineup could see you, converse with you, etc., and would know you, probably could pick you out. The advice center don't have that advantage, but they have to do the same thing as a teller on the lineup.
Well, not quite the same in terms of maybe doing a marketing stint, but that doesn't require any special skill. And
So
so, while I get the point is Bahamians being paid $260 or $300 a week to do that. They could do that and more without breaking a sweat and without requiring any special skills other than standard training. Trust me on that. So why are we moving the jobs? I know you can save a couple of bucks, but at the end of the day, it balances out somewhere, unfortunately, especially after the millions, gazillions, quintillions that they made since 1908 or whenever. How about that? But then I guess, like a lot of these other things, is not purely what quantitative. See my point? Remember I said that earlier. Sometimes these decisions are qualitative, and qualitative decisions oftentimes involves political and other related matters, which are way beyond your pay grade or even
yes, because
level
I'm a
of
right.
discussion. Okay? All right. Way past central banks of a particular country. Way past that. Serious political implications for whatever reason. Hmm. All righty then. Okay, so now you're satisfied that the world of finance is not black and white. It's a very gray, very enlarged area. I don't know about you guys, but somebody in this room should have learned a whole lot of things today that you probably didn't think you'd hear. Hmm. That's the whole idea. All right. So now that we know what the accounting equation is, now that we know what the elements are and double entry bookkeeping and the rules of debits and credits. In fact, the rules of debits and credits have even cleared up the issue of the savings account being liabilities and why they are debited. So it has solved a lot of problems already, cleared up a lot of things. That is the whole idea. And this thing is stuff that you learn a little at a time, week by week, year by, and you grow and grow and grow. And then you hear typologies like the one from Alexandria. And those typologies help us to understand those stories and cases, help us to understand, and like Jeffries and others, that hey, in addition to the academic side of things that we're talking about, are these reality issues that are out there that require sometimes our knowledge and even our attention. And many of you in this classroom, will discover that sometime in the future, a lot of this stuff will come back to you and like, man, wow, I'm really happy I went to that little doggone Saturday thing, even though I could have been at the mall, because now I know how to deal with this stuff. Okay. All right. So now we get to the other side of the fence for the accounting world, and that's called once we've identified the transaction uh, and determined what needs to happen, what needs to be debited, what needs to be credited. This information for accounting purposes, just like any other job, doctors use a little thing they scribble information on hook it onto the end of your bed. Lawyers use their computers these days to put information. Engineers use their software and so on. And so do accountants through software or manually. We have to put these transactions somewhere. And the place that accountants put this transaction is called a general journal. Okay. If you look at your slide, you see the general journal has a very peculiar and unique appearance, and that is a standard general journal, whether you're using a manual system or it's sitting in software somewhere. The structure is basically same. It is used for reporting every single transaction. It's designed to keep accounting transactions in chronological order as they occur. So any journal entry you see electronically or manually and the dates are not in chronological order, right away you have a problem, Houston, because it has to be chronological. Okay? If you see the first and then the fifth and then the third and then the second, that person is totally ignorant as to how to record journal entries, or they need to be questioned as to exactly what their intent is with all that strange dating. All right. So then, with the little bit of information you have, you look at this journal entry, you notice on the left-hand side, there's the date, which is crucial in accounting. Dates are everything. And then next we have the accounting title, like the name of the accounts. Then we have a journal entry. How do you guys know that this is a journal entry? What is that to show you based on what you already know that this is a journal entry? It has a peculiar characteristic that you should know.
The debit and credit?
Absolutely. There's a debit and there's a credit. And the two of them are for the same amount. If your journal entry doesn't look like that, you have made a mistake somewhere. Okay? The only thing that changes in your journal entry is the description of the account. In this case, which account are we debiting? Sorry? If you go to account title, which account are we debiting?
Cash.
Cash. And which account are we crediting? I know my glasses don't work, but I'm looking right at it. Which account are we crediting?
Notes payable.
Notes payable. Okay. You probably have noticed something else that is unique in the general journal. Under the account title, notice the debit is on the is on the line, and the credit is indented. Journal entries are always done that way. So even if you don't see the name debit and credit, where you see an indented title, that's a credit. And where you see a title that's hugging a line, wherever that line is, that's a debit. Always, always. Okay. Now, somebody who may not know may switch it around. Doesn't mean that the journal entry is wrong. It just means that the position is wrong. Debits are always to the left, credits are always indented. Okay. The other thing that a journal entry has is a narrative. What is a narrative? It tells whoever's looking, whether it's a board member, internal audit, external audit, you, somebody else, what that journal entry represents. So having said that, if you look at the narrative in this journal entry on August the 1st, what does that represent, you think? What does it tell us?
Borrowed.
It's abbreviated, but basically what do you think is happening? Note payable, what is a payable? Anyone? Asset, liability, or capital?
A liability.
Always. Whenever you see anything payable, it's a liability. And since we now all know what a liability is, what do you think this brief narrative is saying about this company? Make a guess. Just look at the words and the amount, and what do you think it's saying about this transaction?
It took on a debt of $50,000. It borrowed some funds.
Absolutely. The company borrowed $50,000. And we put the narrative there so that later on, a year, 5 years, 10 years, if somebody has to go back to this transaction, there'd be no doubt as to what it represents. It's an audit trail. See, that's another governance issue. If you have stuff going on in your company, in your business with no audit trails, that's not good. Because people can get away with stuff without any audit trail. You can't trace them. You can't track them down. That's why, for example, when regulators go into a bank and they're speaking with management and compliance, have you followed through with the requirements? They said, yes. They said, prove it. They said, well, it's in our head. But the regulators said, we don't want what's in your head. We want you to document it. Because documentation provides a trail for regulators and auditors to follow. So does the notation or the narrative in the general journal. Okay. So this company borrowed $50,000. How much money did the company receive when they borrowed 50,000 and one?
They received 50,000. That's what you put to cash.
Yeah, they received cash of 50,000. Is cash an asset, liability, or capital?
Cash is an asset.
Cash is an asset. What is an asset by definition?
Something that
Item
you
or
own.
property owned by the company.
Anything that is owned by a company. See that? Once you get into the groove of it, it helps significantly from an accounting side, and it helps significantly in any typical discussions on the finance side. That's the whole point. Having said that, can somebody tell me what happened on August the 3rd? What transaction occurred on August the 3rd?
The company purchased some equipment,
Yes, for how much?
$30,000.
How much did the company actually pay out?
$30,000.
Absolutely. Even though you raised a question, you're absolutely right. And this information, notice the way it's set up. If it's set up properly, you don't even have to be an accountant to know. You could be a board member with no accounting experience. So you just need to know little things like this. Suddenly it comes across your desk and you're like, really? You paid out 30,000? What type of equipment? So you start asking questions now, just because you have a little bit of knowledge about it. See my point? All right. How do we know that the equipment was not purchased on credit?
Because you credited cash.
Cash.
Meaning?
You paid out the funds.
Yeah, we paid it out in cash. If we didn't pay in cash, what do you think that entry would have been? That title?
Accounts payable.
Yeah, either accounts payable, or in this case, since it's a loan, a note payable. Okay. Usually accounts payable is what we use when we're buying inventory stuff for inventory and other supplies. When we have a bank loan, we refer to that payable as a note. Because when you get a bank loan, you have to go into the bank and sign what we call anybody knows? It's a P note. What does the P stand for?
A promissory note.
A promissory note. Okay. Stop it. We are a budding doggone. Okay. So, is that the final journal entry on August the 3rd? Anyone? Is August the 3rd the final journal entry?
No.
There's another transaction?
A purchase of a vehicle
Yeah, purchase a vehicle.
on the 6th of August.
Okay, and how did you pay for it?
You got a loan for 18,000 and you paid 2,000 in cash.
My. You guys learn quickly. Absolutely. You got a loan for 18,000 and you paid $2,000 in cash. See that? And that's what the bookkeepers and accountants are doing all along while you're out doing whatever you're doing. However, you never know when your job is going to clash with some of the things they're doing, either directly or indirectly. And so every bit of information you get in the accounting and finance side of things helps with your governance work. Remember, I said nobody's exempted from governance. All of us are responsible for trying to ensure that things are done right. And we don't have to be an expert in a particular area to try to help in the fight to make sure that things are done right. Even if you don't know anything about an area, but something looks suspicious, you should report it. Remember that? Especially if you work for a financial institution. You have a legal duty to report it, even though you don't even understand what you're reporting. You just have a feeling, a suspicion. So imagine if you have a little bit of information, like what you're gathering now. All right, so that's your journal entry where all of the transactions are recorded for your company, and the accounting office's job is to make sure that every single transaction is recorded. Everybody who conducts transactions must make sure that the work they do goes through the accounting department so it can be properly accounted for. Okay? There are some persons in other departments sometimes who don't get information to accounting. They don't get it there on time. They don't get the correct information. They lose something goes wrong. Everything gets a little messy for that transaction. But ultimately, everything from every department, every part of the organization should be funneled through so that they can be properly recorded. So now that we know where these transactions go, we know the next step after recording transactions is what? Anybody? After we record our transactions in the journal, what's the next step?
Post to the ledger.
Post to the ledger. Now, what is a ledger? Anyone? What is a ledger?
A record that keeps all accounting transactions.
Oh yeah. And for those of you who have never seen a ledger in your lives, you'll see one soon. But I'm not an accountant. You don't need to be to understand what a ledger is and the importance of it. It's all part of the financial network, and a very important part of the financial network. Okay, for sure. So any discussion that comes up when these things crop up, you're no longer ignorant. That's the point. Your ears will be pricked. Ledger? What the hell are they talking about? They move a little closer. See what's going on. So it keeps a record of all the accounting transactions. Where are these transactions recorded again? We just saw it. Where are these transactions recorded?
A journal.
In the journal. Once we get them in the journal, then we have to then post them to the ledger accounts. Now, for us to see how important these ledger accounts are, because if these postings in these journals, etc., are not done correctly, your financial reporting will fail. They will come under question. They will cause you to fail audits potentially. It's a big deal. And then everybody at the top is pissed off with somebody, beginning with the accounting department. Because a lot of fraud, errors, mistakes, and all these things occur during this process for one reason or other. Okay? So you may not be working in the account office, but whatever the results are, they're not favorable, you will be impacted. So you're learning this stuff just to have an idea about the accounting and finance side of things and how they're connected, and you're learning this stuff because it impacts everybody. Okay? So let's look at this account. We call this a T account because it looks like a what? We call this a T account because it looks like a
T.
T. Yeah. But the other name for T accounts is ledger. That's the correct name. Notice on the left side of the ledger, what do we have? Debits or credits? Remember the rule? What's always on the left?
Debits,
Okay. And what's always on the right?
credits.
Good. If you go back to the journal we saw a minute ago, you see the debits are to the left, hard to the left, and the credits are indented to the right. Same thing in the ledger accounts. Okay. What are the total transaction amounts in the debit side?
37,500.
Indeed. So you received 37,500 in, what's it? Is this a cash account?
Yes.
Yes.
Yeah, this ledger account is a cash account. You received 37,500. And then how much did you pay out on the credit side?
$4,700.
$4,700. So if those are the total transactions in your account, your ledger, what's the balance in your cash account? What's the balance in your cash account?
34,200.
34,200. Anybody agrees with that? Any seconds? 34 going once, 200. Is that correct? 34,200 going twice?
32,800.
Doggone it, another number, 32,800.
Yes, correct.
Which one is it?
32,800.
32.
32,800.
Okay, fantastic. So maybe we have the same calculators come with different numbers. But hey, that's how it goes, which means that for the final exam, first of all, you do need a calculator for these classes. And secondly, when you're calculating, make sure you double check. Because sometimes these machines and us do strange things, don't we? All
I have
right.
a question.
Yes.
I might have missed it because I stepped away for a second. What does the number mean on the side?
The number.
It says NO and then underneath it has one in bracket 6, 12, 14.
Oh, I see what you, anybody wants to take a shot at it?
Is it the invoice number or the transaction?
More likely the transaction number. For our purposes, this is just to indicate to us, it could be dates.
Right. I thought that's what that was. I just wanted to.
They didn't tell us directly, but typically, it would either be a date or a check number, potentially. Okay? One or the other. In the real world in practice, you'll know for sure. Make no mistake about that. Okay, good point. And you're looking as closely as I wanted you to look. That's great. All right, so that's an example of a cash account. In your next slide, you see a whole bunch of accounts. Do you see them? Like a beehive of accounts. And this beehive is just an example for a small business. It's not even all the accounts in a small business. In a medium business, it's 10,000 times more. And for a large multi-million, billion-dollar business, it's gazillion times more accounts. There's an account for every single transaction. How about that? You cannot share accounts. You have to have an account for every single possible transaction. In accounting, if we have a transaction that we've never seen before, we open up a new account. We find an appropriate name for it, and we open a new account, a new ledger, and put the transaction in that ledger. Okay? No sharing. Oh, I'll just drop it in this one. No. We don't do that. Every transaction has to have its own individual account. Okay? So let's go down the line and see, by the way, let me just say this. This collection of accounts has a name. Anybody knows what that name is? It's somewhere right in front of you. This collection of
General
accounts.
ledger.
Action number?
The
Accounts
general,
receivable?
that's right to your right.
Accounts
General
receivable?
ledger,
No, not accounts receivable. Somebody said it. What is it?
general ledger,
General ledger. Okay. So when we have one account, we say it's a ledger account, one. When we have two or more, whatever that total might be, we refer to them as general ledger accounts. So they're all held together in what we call a general ledger or an area where we have all the individual accounts stored that are possible for any particular entity or company or business. Okay? So let's check out some of the names. I'm going to call the name of the account, and I want you to tell me that based on the accounting equation, if it's an asset, a liability, equity, revenue, or expense account. Okay? Let's see how that goes. Doesn't have to be perfect, just let it rip. Cash,
Asset.
asset, yes. Office supplies,
Asset.
asset. How do you know?
Is that something you own?
owned,
How else do you know? That's correct. How else do you know? It's sitting on what side of the ledger?
It's sitting on the debit side.
The debit side. And if we apply the rules of debits and credits, we'll see it jumps right out at us. Vehicles,
Asset.
asset, yep. Accounts payable,
Liability.
liability,
note payable,
Liability.
liability,
Kentucky Fried Chicken payable.
Depending on what it is.
Doesn't matter if it's a payable, it's a what?
liability,
I hope I made my point.
Oh,
Yes. Capital stock,
liability.
Equity. Equity.
equity, yes. Remember, capital, no mind that stock they put behind it. Capital is equity, okay? And remember, stock is the Brits word. There's another name we use in the US. What do we call it?
Inventory.
Well, not in this case. That's an interesting point. If it's capital in the front, then the stock is not inventory.
No.
It refers
yes,
Shareholders'
Yeah.
equity.
Yes, shares. Shares. Okay. Another expression that you might see is owner's equity. If it's an individual who owns the company, or partners capital if it's a partnership, or shareholders equity if it's a company or corporation. Okay. All right. Just some things coming out at you. Office rent expense. Asset, liability, equity, revenue, or expense.
expense,
Expense. Utilities.
Expense?
Okay. Accounts receivable. Interesting.
Asset,
Asset indeed. Office equipment.
Asset.
asset,
Asset. Bank deposits.
Would that also be an asset?
No. But I was
That's a
hoping you said that
liability.
so I could say no. Remember all.
Oh, you don't went on the bank. Oh, sorry.
Uh-huh. I caught you with that
Sorry.
one, yes?
Yes,
No.
you did. I was looking for
Yeah.
that in the general ledger. I don't see that.
I know, I know. I just threw that in because I was part of our why do we debit the savings account. So yeah, I thought I'd throw
That's a
that in.
liability.
Yes,
Sorry.
for sure. Yeah, it's a little sneaky one. Besides, you probably wondering, like, I don't see that in this general ledger. Okay, notes payable.
Liability.
Liability. Dividends payable,
Also a liability.
also a liability. Service revenue,
You just said that's a revenue account.
it is a revenue account.
Income.
Asset,
Not asset, it's a revenue
It's
account.
income. It's revenue, income.
Yeah, it's a revenue or income account.
so
Very good.
capital, shareholders.
No, not shareholders capital is just a separate account for your investment that you make. But this service revenue is where you put all of your income. You
From
follow?
a service type business.
Yeah, if you have a service business like a hairdressing business and you make money from it, all the money you make goes into your service revenue account. If you sell high-end shoes, then all the money you make from the sale of your high-end shoes will go into your shoe sales account. Okay, revenue or income. Okay. What about salary?
Expense?
Expense, yes. And finally, dividends.
Expense,
Asset?
Aha. Which one?
Which one is it? You didn't state what type of dividend it is.
Oh, no, I know.
expense,
Yeah, I left it out on purpose. Dividends, it's an expense. How do you know?
because it's gonna be paid out from the company.
Yes. Because the company is paying it to the shareholders, it becomes an expense of doing business. The reason why I didn't say dividends payable, because I didn't want to give away that it's actually not a payable. It becomes a payable later on in another entry. But here, once the money is paid out, it's treated as an expense of doing business. Okay.
When it's a payable, it's an accrual. It hasn't been paid
Yeah,
yet.
when it's a payable, yes, you haven't paid it yet. Okay, we have expensed it, but we haven't paid it yet. Okay, for sure. All right, good stuff. You guys, not bad for the blah, blah, blah. All right. So now that you guys have come to grips thus far with the identification of a transaction and all the finance and business stuff around it, the reporting of the transaction in the general journal, the posting of the transactions. Notice in the general ledger, all of these accounts have postings, debits, credits, and balances. Debits, credits, and balances. Now, the revenue account only has one transaction. How much revenue did you earn during this period? How much revenue did you earn? Anyone? Just go to the revenue account. That's the beauty of accounting. Go to the revenue account. How much is in it?
24,000.
24,000.
Absolutely. And therefore, the balance in your revenue account at the end of the month is?
24,000.
That's it. How much cash did you collect?
Oh, wow. That's saying $401,570.
Who agrees with that?
I agree.
But you have to
Agreed.
net it against what you paid out.
But that was not my question. My question
How much
was,
did you collect?
how much
Oh, where's
cash
your
did you
receivables?
collect? How much cash did you collect? Don't read anything else. How much cash did you collect?
4,157.
420,000.
420,000.
20,000.
What?
Okay,
The
folks?
401 is the net.
Oh,
The 401 is the net. That's the after you check out the payout, what you paid out against
How
what you
much ca-
received.
How much cash did you pay out?
$18,430.
And so how did we arrive at a balance of 401,570? How did we arrive at that balance?
we minus it
That-
from the capital
what
You subtract what you received
You
or
subtract
what you
what you
paid
paid
out
out
from what you
from what you
received.
received.
Absolutely. We subtract the total of what we paid out from the total that we received, and whatever is left goes into the cash balance of 401,517. How many credit entries went through that month on cash?
5.
How many debit entries?
2.
Okay. Doggone it, before you know it, you guys will be transferred to I don't know where. All right. Well, wherever you're transferred or not, it's valuable information in one form or another. Make no mistake about it. All right. Okay. So now that you are familiar with that crazy stuff, whether it's from a board level, senior management level, middle level, clerical level, doesn't matter. It's all connected somehow. Let's take a quick look at the users of financial information. We are told that this financial accounting information is used primarily for decision making, generally by external users such as people who lend your company money, bankers and government and investors. All of these people are outside the firm. They are watching to see if your financial information is in order. Because if you don't have a reputation for getting clean audits, soon investors are not going to invest in your business. Government will check everything you do to see if you've been reporting your taxes correctly, and so on. And external users, other than investors and government, like vendors, people who supply you goods and services might be thinking, should we continue to do business with this company? Or will our payments and our business be in jeopardy because they're not getting clean audits? Okay? For sure. On the other hand, managerial accounting information is used for decision making by persons inside the firm, such as anybody knows who are the internal financial information accounting information users internally.
Senior management,
And
operational managers, and employees.
yes, why would employees be interested in managerial inside accounting information? You think? Employees. Why would you guys be interested in that? Other than having to do it for the class, of course. Well, for example, if an employee works on an assembly line, they may want to see the reports on how many products were produced daily. They may want to see a report on the quality of the products that were produced. They may want to see a report on those products that did not meet the quality standards and so on. They want to make sure that if they're working by piecemeal method based on the number of pieces they produce, that the number of pieces that are recorded for them to be paid are correctly reported. See, all of this is managerial accounting information. In this case, that an employee might be interested in for obvious reasons. Okay? So whether it's financial accounting information or managerial accounting information, suffice it to say that all the information is critical for all the users involved, which is why it is so important that this information is subject to good governance activity, that whenever a problem arises anywhere, that the appropriate levels of the organization take steps to resolve it so that it doesn't reflect negatively on the firm in any way and cause any serious reputational damage. One of the worst things, other than money laundering, for example, that can cause serious reputational damage for a firm is poor accounting management. A firm that's being discovered to be cooking the books and fixing numbers and involved in all kinds of accounting fraud. It's a nightmare in recent years. All right. Many firms have been caught in this. Regulators and others have been trying to convince them or persuade them, look, stop doing it. Auditors are encouraged to make sure that auditors' work are complete. Hopefully, whatever problems there are, the auditors will discover, if not all of them, certainly the majority of them. Okay? And so all of this then that we've talked about so far is what we refer to as the accounting process, which is a series of all of these transactions coming together. And somewhere at the end of the year, once the transactions are posted, we prepare the financial statements, which we will talk about next week, to see how all of this information is summarized and dispersed, and how the auditors deal with them. But certainly, and then once that is done, the books are closed at the end of the year, and the whole process begins one more time. Does anybody remember from our earliest discussion last week what period assumption means? Periodicity. What does that mean? Period assumption. Anybody remembers? Hint that the accounting period generally runs for?
Is it 1 year?
1 year.
It is 1 year. Okay, the period assumption in accounting is that accounting generally runs for periods of 1 year at a time. Does it mean that you cannot get information less than 1 year, more than 1 year? Certainly not. The 1 year has just been the designated period to represent the time frame for the typical accounting cycle. Okay, so if somebody brings you a financial statement and say, has that 2 years of accounting, nobody's saying that that financial statement is incorrect, but it does not conform to the periodic assumption in accounting. It has to be for periods of 1 year each time. Okay? And so we end with just another look at our accounting cycle. I'm sure now it means more, hopefully, than before. We identify, we collect, and we analyze information. We record that information where? Anyone? We do record our information.
In the journal.
In the ledger?
Not the ledger.
In the journal.
In
the
the
journal.
journal. Once we get the information in the journal, then somebody will go ahead and post it where?
In the ledger.
In the ledger accounts. Remember them? That whole gang of accounts. Totally.
In the ledger.
Yeah, the general ledger. And typically, once all the postings are done, we'll see next week that the transactions will then be taken over to what we call the what?
Trial balance.
Trial balance, and then basically the final step, which is not the final step, but for now, the preparation of
Financial statements.
Financial statements. So we've covered most of the gamut so far. Next week, we will look at the trial balance and the preparation of financial statements and the preparation of budgets and a little discussion about audits. And then our final week, we will talk a little bit about personal and company finances, the type of things that we should be considering in terms of how we go about managing our savings accounts, our business transactions, what kind of investments we should make in terms of stocks and bonds, a little bit about those things, just so that you can be a little more enlightening about what's swirling around you every day that you go to work. And remember, under corporate governance, you never know when you're going to be confronted by any of these things that we've looked at from the beginning of this semester to this very day, right? So don't tuck it away. Sooner or later, you will be required to call upon some of that information, and hopefully you'll be able to put it to good use. All right, any questions before we break? Wonderful, you guys have a safe weekend.
Mr. Wilkinson, I just had a question. For
Yeah.
the final exam, is it going to be surrounding the entire discussion on the corporate governance side as well as the finance side, or it's just on the financial side?
Just on financial literacy side. It will not be cumulative.
Okay,
So, yeah, whatever we've covered up
Great.
to your examination midterm, that's it for midterm. Everything after will be all that you'll be responsible for. Okay, so you don't have to go back.
Okay, great.
All right.
Thank you so much.
No
Yes,
problem. Any other questions? Wonderful. You guys have a safe week, and I'll see you next Saturday, same time.
Good day.
Enjoy.
All
Take care.
right.
Good
Thank
afternoon,
you.
everyone.
Yeah, bye-bye.